Hi, fellow traders. What's happening? I am back in the saddle after a nice week-long vacation, much needed. A lot of us tend to discount our mental health and taking time out, being away is much needed, especially when you do as much as I do. And I separated myself from the market as much as I could. Every day I opened up the room, posted my scans and everything, and I kind of looked at what was happening then, but I separated myself. There was no watching stuff on my phone during the day, no coming back, looking at what's happening, tracking this, tracking that, no market anything. And it's exactly what I needed. This was the first time that I've ever been on vacation that I didn't trade and I didn't make enough money to pay for it. Every time that we've gone on vacation, no matter where we went, even when we went to Turks and Caicos, I only traded a couple of days, but I was able to make enough to pay for the whole thing. And that's always pretty cool. But sometimes, especially after the year and a half that we had with this COVID stuff, not being able to really travel like we wanted to, this is exactly what I needed. So I'm happy, I'm back, I'm refreshed. I've got some intern that's going to help me get all of this stuff back on track with my website, and he's already started putting stuff up, trying to catch me up today. So I'm really excited moving forward. It's going to allow me to do more in terms of trying to teach you guys and help you become the trader that you want to be. I know you guys have heard this slogan, one shot, one kill. We talk about it a lot in trading, having that sniper-like mentality. But most of us, you may not know the whole quote. It's part of a military thing. I know that one shot, one kill, we kind of relate it to snipers. But the whole quote is stay low, move fast, kill first, die last. One shot, one kill, no luck, pure skill. And if you've been with me in my trading for the last 7-8 years or long enough, a lot of my trading kind of coincides with this. Now the first line, stay low, move fast, for me, stay low means staying within myself. Don't try to get above who I am as a trader. A lot of people, after they learn something and they make 1 or 2 or 3 nice trades, they think they know everything and they blow up. And they literally blow up. Their heads blow up and their account follows very quickly. So for me, stay low meant, staying within myself. Move fast meant to be ready to take advantage of the trade when it sets up. Not in, out, in, out, in, out. Not that kind of quick. But enter when the stock triggers. Being ready. Like today, I completely missed Facebook when it broke the channel. I turned my head for 5 seconds. I come back and it's already broken out and it's above my entry zone. I put an order back inside my entry zone and never came back. So I walked away from it and I didn't chase it. Even though I would have probably made $1 chasing it, that's not the point. You have to be, stick to your rules too. But that's the kind of fast I meant. When it triggers, you enter. You don't sit there. You don't try to analyze or decide, okay, it's triggered. Do I really want to take the trade? No. Execute fast. Get in. If it works, great. If it doesn't, get out. Move on to the next one. So that's kind of the mindset I have with that. Kill first means you want to be taking profit before the trade starts to fail. At strategic points, you want to have your profit targets laid out. Now you've got the final target, which is going to give you, at least twice your risk, but you want 3 or 4 times, 5 times, however much you can get. But you know where you think the stock's going to go. You've already analyzed that. Now you need to start killing it as it goes up, because you don't want to be the last one trying to kill it, because you're going to be the first one to die. So you want to be the first one to start killing this trade, and once it goes off, you want to be the last to get out. You want to be the last one to kill that trade completely. And that's what I think about that. That's what I'm thinking about. Obviously, one shot, one kill. That's the mindset I have of, I just want to focus on that one stock and nail it. I want to give it that one shot and nail that one stock, kill it, and move on. So I don't have to go around trying to find which stock is moving, which stock isn't moving. We don't want to go through all of that. It's less stress. You're more focused, and you're ready to knock it out of the park. No luck, pure skill. Obviously, if you guys remember, several years ago, I had the slogan, trade for the skill, not the money. When if you develop the skill for trading, the money is going to follow. No skill, no money. If you're trading on luck, hoping that this trade is going to go your way, 9 times out of 10 is not. 8 times out of 10 is not. And you're relying on luck. To me, yeah, there is a luck element in this. But my definition of luck is luck is the product of skill and preparation. So in order to be in that place to take advantage of, hey, if you're in a stock and some news comes out and it shoots up, or you're short, some bad news comes out and it shoots down, the technical analysis that you did, your skill, and put you in the right place at that time and to take advantage of it. So to me, luck is a product of skill and preparation. So if you do this, if you write this whole, not just one shot, one kill, but write the whole quote down and kind of correlate your trading to this, I think it'll serve you well. And all we're doing is trying to find things that we could relate to that can keep our minds focused and doing what we need to do. It's one of those things that it may not work for everybody, but for a lot of people it may work. You just have to find what works for you, and I try to share as much as I can going forward. All right, so let's take a look at the SPY today. Look at what it's doing. We were kind of in a linear market for a long time, most of the second quarter. And we're going to talk more about that when we do the swing on Wednesday. I'm going to close out the month, kind of give you guys an idea of where I'm going with the swing fund and all of that good stuff. So we'll do that on Wednesday. Wednesdays are going to be the swing days, designated as that. And we'll talk more about that then. Plus we have the sessions on Sundays that we always do. We have a private Twitter feed that, I'm going to be able to tweet in more because I'll be dealing with less. So, all of that's going to be at full speed here. But here we see we're finally breaking out. The last time we were kind of in this little deal here we broke out and we hit the top of this channel. So what we're trying to do here is we're trying to get back to the top of this channel, this ascending resistance. And you see, since October last year, we've been hitting the top and bottom of this channel. Here we kind of stayed linear. We didn't really sell off, but we just kind of tracked up. Every now and then we had big sell-offs back to the level. So here I'm looking for it to hit maybe 450 at some point. It can. I'm not saying it will, but based on technical analysis, you would think before we get a deep pullback to this level again, we're going to test the top of this channel. So that's what I'm going to be looking for. And again, doesn't say it's going to happen, but we're going to be looking for it. So why is this important in day trading? If you're going to trade stocks that don't have a catalyst or that have a weak catalyst, you better damn well know which direction the market is trending and what it's doing that day. That's why, I get a lot of people that ask me about stocks or post stocks that are gapping, but there's no discernible catalyst, nothing significant. So it's probably not going to trade opposite the market. It could if there's something behind it we don't know, but most of the time it's just not. It's going to trade with the market. If you have a stock like today, we traded, and we'll look at this trade in a minute. We traded Space. Okay, Space had its own catalyst. So it was going to move opposite the market, or it could move if it was going the opposite direction. So it's important every day to look at the market. It's just like this day here. When was it? Thursday? We had a big gap down last Thursday. Where's the value on a big gap down day? I think I did mention this in chat before I left for the day, that you have a big gap down day, the value is going to be to the long side. Unless you have stocks that have bad news already and negative catalyst that's going to take it lower, everything else, you better look for a long out of it, because the market's going to bounce. It's going to be strong. People are going to be buying. They're going to be buying the dip. Buying the dip has been working for I don't know how long, and it's going to continue. It's one of the easiest strategies known to man. Buying the dip. As long as it works, people are going to keep doing it. It doesn't work in a linear market, but it does work once the market starts taking off. All right, so that's kind of what we're looking for. We'll get a deeper analysis of the market going forward. So we're finished up June, $4,040.17. This was a crazy week. I still haven't gone back and done the individual days, but this is where we ended up, only 348. So this was kind of the worst week we had. This was only 3 days, so 786 for 3 days is not bad on that. So that was June. May was an even stronger month. We had some really good days going into the summer. Then summer hit, and that was that. We kind of slowed down a little bit. But April was the really bad month for me. Really, really, really bad month. And you could see it just wasn't good at all. Only $1,000 we made that month, that I made that month. This was just a killer week. 2 $800 loss days, a $500 loss day, a $600. I was getting outside of myself. I wasn't staying low. I was trying to trade like I was in a bigger account. So I was having to take these big losses. Yeah, if I was in a bigger account, I would just let it go and and trust the long-term technicals. But short-term day trading, you've got to focus on, the intraday technicals and focusing it on it that way. But not bad at all. Equity curve is going in the right direction now. We may be due for a little pullback again in here before long, but I'm going to try not to get there. So we are doing pretty good. Only 3 red weeks so far this year. Can't complain about that. I can't complain about it at all. All right, so this was the trade from today. SPCE, you've seen us do this coming into the summertime. I get a nice stock set up. Once it breaks the pre-market low, once it breaks that sweet spot, we're jumping in. And we're going to ride that momentum down. Look, the momentum on this is over at 10 o'clock. It's done. It really started to slow down, around 9:45. But this is why we just want to pick that one stock that has the big move potential. That doesn't mean it's going to do it, but it has the potential to make that big move. If it doesn't work, you kill it, you move quickly to the next opportunity, and you focus on that. We're not jumping from stock to stock to stock. We get one stock, we focus on it, we lock in. If it fails, if we don't like what we see, we move on. We have to make that decision and move on. So this was a really, really nice move here. Hit the first target, which was 46.50, a little bit over a point. This was the linear regression channel. We just took it out. 45 was my next target. The next target was the 20-day. And here's what I did with this. I actually put it at 42.50. I thought we were going to sell through this really quickly, at least hit the $0.50 mark and bounce before it recovers. We did not get to 42.50, but we did hit the 20-day. Unfortunately, I didn't have my order out there. I had it at 42.50. So I changed it, put it on the level here at 42.90. And what the hell does it do this time? It sells all the way through and it would have hit my 42.50. Really, it would have hit 42. But the next target was right here at 41.70. But it didn't quite get there. So it bounced. It never really took out the 9. Never really took it out. Because here we closed above it. This never confirmed by going higher. Here we closed above it. This never confirmed. So we never really lost the 9 here. We did peak above it, but it never got claimed. The whole time the 20 was just putting pressure on this thing. Eventually it got to my first target. The next target. This was the last target. I still have an order out on this, which is why I don't have it totaled up yet. I'm still waiting on this. Yeah, it's after 5 o'clock, but I've seen this drop many times. After 6, after 7. Going into 8 o'clock, this thing drops off. If it doesn't, I'm closing it. It's only 10 shares I got left. But this is a prime example of one shot, one kill. You saw me do this week before last, before vacation on SPCE, almost identical trade. The only thing I did wrong was I kept trying to trade in here, which we're eliminating that. And here's what I'm talking about. WBA was another stock we took before we left on vacation. Same deal. But I went ahead and killed it. I didn't let it run. I went ahead and killed it. And then I started trading in through all of this stuff. This is not the clean trading that I like to do. This, if I just left this on, and by the time we got to the close, I closed it out, I probably would have made more money. I think, I would have made more money because I lost a lot of money up in here. Like I lost on this trade. Lost on this trade. And this is the trade I made money on. So if I had eliminated that and not even worried about this and just traded this and just focused on this, I would have made more money on it. And the stress from this I wouldn't have had to deal with. And I probably could have found another stock that had a big sell-off or a big, run up once it broke out or broke down to supplement this. So this is where I'm looking at cleaning up my trading and going back to what got me to where I am. All right, so that's going to do it for me today. SPCE was the only stock we traded. I still got a piece on. If it works, great. If it doesn't, we're walking away. And we're walking away with some decent money. This should be well over 5, maybe $700. I don't know. But we'll see here later tonight. But that's going to wrap it up. Really good first day back. Looking forward to kicking this thing off and getting back on track and finishing the rest of this year strong. So you guys have a great rest of the day, and I'll catch you in the morning.